All right, we're going to be breaking down what might be one of the most boring topics in all of business, and that's the P&L, your profit and loss statement, other times called the income statement. So if you ever see income statement, profit and loss statement, P&L, essentially referring to the same thing. So my hope is to make this as simple as possible. Just understand that this can get a lot more nuanced. We're going to go through a really, really basic version of understanding the profit and loss statement. But when I started my business 6, 7 years ago, I remember getting this from my bookkeeper, getting this P&L document. And I'm not going to lie, the first year or two, I just kind of didn't even open it, or I'd open it and then close it right away. I had no clue what any of it meant. And so I feel now so much better prepared to talk about a P&L, and that's what we do at our company, CEO Finance Academy, where we essentially help owners become their own CFOs. And I want to break it down really quickly. So I'm going to be putting up here in a second on the screen right up here a very, very elementary version of a profit and loss statement. Now, I want you to know there are varying terms for almost each of these things that we're going to be talking about. So if your P&L, for example, says something different in terms of the nomenclature, just know that we're going to be kind of talking about similar things. And depending on how your bookkeeper does it or where you live, sometimes the words are just a little bit different. And if you're getting into more nuances, those meanings can actually be very significant. But we're going to talk in generalities here. So let's get into how do you understand a profit and loss statement as a business owner? Okay, so the very top line that you're going to see here is total sales, or in other words, total revenue. Sometimes you'll see total revenues or total income or income. Sales, income, revenue, they can vary. Essentially, what it's saying is how much business or how much money has been collected by the business in this time period. How much money has actually come into the business during this specific time period. So in this case, we're going to say $1 million has come into the business. We've collected $1 million. That's going to be our top line: sales, revenue, or income. Now, you'll notice below that there's a cost of sales or cost of goods sold, or you might see it listed out as COGS, COGS, which stands for cost of goods sold, or depending on if you're more service based, it might just be cost of sales. And what this actually means is what was involved in terms of cost to either build and make the product that was sold or to deliver the services. So let's break this down in a couple ways. Let's say you make pencils. Well, to make a pencil and sell it, you have to get the wood, you have to get the lead, you have to get the rubber for, the eraser. There is a cost to each individual pencil that has to be, accounted for. And essentially, let's say you're going to sell 1,000 pencils, and it costs 20 cents to make each. Your cost of goods sold would be 1,000 times the 20 cents per pencil, right? So that's what we'd be looking at in terms of cost of goods sold, or cost of sales, meaning, hey, maybe for example, you run a dental practice and you have another dentist who does the service. What does it cost to have them do the service and fulfill on the service? So that is your cost of goods sold, or your cost of sales. Now, you'll notice below that you're going to see gross margin. This means your gross profit margin. So gross profit margin is that total income or total sales or total revenue minus your cost of sales. So in this example, you're going to see 1 million minus 575,000 of cost of sales. That's going to give us $425,000 of gross profit margin. Now, this is not our net margin because we're going to factor in one more thing. But up to this point, we've now figured out our gross profit margin. So revenue minus cost of goods sold equals your gross profit margin. Now, here's the thing. You probably have other expenses. In fact, I can almost guarantee that you'll have other expenses to run your business. So things like rent, things like paying for an admin team, things like paying for the internet to be able to have access to the internet. Maybe you take people out for team lunches, so there might be food costs in there. Those are what we call operating expenses. These can be operating expenses, they can be non-sales expenses, they can be non-cost of goods related expenses, or sometimes you'll just call them losses or less. Sometimes they'll just write less and then expenses. These are all the expenses incurred by the business that do not involve the actual producing of the product or delivering of the service. So in this case, you're going to see here it says operating expenses $275,000. So if we take gross margin, your gross profit margin of 425,000 minus 275,000 of operating expenses, you are left with what they call net income, or in this case, net profit margin or net profit of 155 or sorry, $150,000. So that is how you get to what is the net income or net margin for your business. And ultimately, this is kind of where you can determine how much money is going to be used in the business moving forward, of whether you have a gain or a loss. And so if we just repeat this again, you've got sales minus your cost of sales or cost of goods sold equals your gross profit margin. Then you're going to subtract your operating expenses, or overhead is another term that people use, and that's going to create your net income. So gross margin minus operating expenses equals net income. Now, you might be wondering, okay, well, why do I get this every month and why is this so important? And the reality is, you want to use this as a scorecard to figure out, hey, is my business doing well? Is it struggling in certain areas? And where do I need to focus attention? So, a couple of examples might be, hey, our costs of goods sold are 90% of the income that we bring in. So, we really have a tiny margin, wiggle room for being able to make a profit, period, because it costs us so much to make the product or deliver the service. You might have to look at pricing or say, hey, we've got to find a way to reduce our costs for our cost of goods sold. Or on the other hand, you might say, hey, we actually have low cost of goods sold and our gross margin's really great, but our operating expenses are through the roof. Where can we cut back on our operating expenses so that way we can continue to have a better margin? So I hope this helps. This is a super simple way of thinking about your profit and loss statement. Again, some of the names and nomenclature can change, but I hope this just gives you an idea of when your bookkeeper sends this to you, kind of the big numbers to be looking at. If you found this helpful and you like learning more about small business growth, ownership, understanding your finances, then please like the video and hit the subscribe button. We'd love to have you join, and we'll catch you on the next video.